handouts, 2 turntables and a microphone, bottles and cans, and just clap your hands, or just clap your hands. Where's that?
Hi everybody, Ryan Dietrich here with Schaefer's Investment Research, and this is another edition of Ryan's Whiteboard. Well, it's Monday, we came in, and so far we're getting a little bit of a bounce. Now the big question on everyone's mind is just another dead cat bounce, kind of like we've been seeing the last couple of weeks, or, hey, did we just form some type of a major low and potentially rally? My gut feeling is we aren't quite at the ultimate low here. We definitely could have some more weakness. Nonetheless, here are 2 charts I'd like to discuss that actually, come off pretty bullish here. And as traders, we have to be open to anything. Now, the first one, we're in the month of April here, and historically speaking, April is one of the strongest months. Now, this year, obviously, it's been anything but that. Still, over the past 40 years, the S&P has bottomed on exactly April 14th, and it's bounced. You can see there the second half of the month pretty good. So today is April 14th. Now the obvious concern to someone is, well, usually April's pretty strong, little weakness ahead of the tax man, and you bounce, and then you have the bounce into the end of the month. This month, that's not quite the case. We've been very weak, but still, from a seasonality point of view, second half of April is usually strong, so let's just be aware of that. Now, next chart I'd like to talk for a second about is a proprietary one that we keep track here in-house. Chris Preibel in our QA department keeps track of this. We call it the front month gamma-weighted put-to-call ratio. Now, keep this simple. We look at 3 major ETFs, and when we see this spike higher, like as you can see here, it's spiking to one of the highest levels since June 2012. That tells us there's been a lot of puts all of a sudden starting to show up in front month options on some of these big ETFs. Now again, what does that mean? Well, you think about it for a second. Traders, investors, institutions probably get pretty itchy, pretty panicky. They start to add some put exposure on some of the big ETFs as hedges. I mean, they could be outright bearish positions. My guess is they're probably hedges, but regardless, when we see that, that's, there's the old saying, buy when there's blood on the streets, start to buy when others are fearful. Well, when you see what we've had going on all of a sudden here, there's definitely been some fear coming into the market, which is good. And this is just one indicator that if you just looked at this, previous spikes have been some really, really nice buying opportunities. So be very open to that. So that's it for today. I will lastly say be sure to follow me on StockTwits or Twitter at Ryan Dietrich, and also feel free to go to #Ryan's Whiteboard. Let me know what you think of this video or what you'd like to see in any future videos. And everyone have a great day, and I will see you soon. Thank you.